Hey everybody, John Sposato here from the Arizona Home Group at Keller Williams Sonoran Living. Hope you're having a fantastic November and you're totally psyched for a Thanksgiving holiday next week with your friends and family. I want to dive right into it because we got a lot of stuff to cover today, but let's talk with inventory, right? We always are three metrics. We've got inventory, we've got listings under contract, and of course we've got pricing. So here's our big blue wave, which dipped down really low in the spring, kind of came up all summer, and then started to taper off again. So suddenly there's less homes available today than there was last month. Let's look at the homes that are now under contract in the red line here. So we see a little tick up, okay? So 11,300 homes are under contract right now. That's a lot of movement, a lot of buyers out there, a lot of velocity, as we say. So that increased in the last week or two as well. Almost approaching the green line, which was pandemic last year when things were absolutely completely bonkers. And of course, there's pricing. So $424,000 for the median home price, gone up again last month. When we started this whole COVID thing in April of 2020, it was $295,000. So it's come up quite a bit. There's a number of reasons why this has all happened. We've all talked about this ad nauseum over the last year on our reports. It's going on across the entire country. Inventory is down, pricing is going up. But I have a theory for what I've been watching in the market for the last couple of months as to why it's getting worse and probably will not slow down. And that has to do with inflation and interest rates, right? Which usually work hand in hand. Now, usually when inflation goes up, interest rates goes up to sort of bring inflation down. We all know that inflation is really high right now. The federal posted rate is 6.2%, which has been going up all year, month over month. But we all know that that number is actually really higher, more like 10, 12, 15%, even 20% in some sectors. I mean, look at gas, look at your grocery aisle, and then of course, look at rents. And that's going to be the subject of the rest of this conversation. So rents are going through the roof, just like pricing, okay? We have a shortage of inventory. Well, there's a lot of investment houses out there that are looking for yield. They're looking for return on their dollar because interest rates are so low and they're not really getting the return. And people are fearing that inflation is going to go out of control. So how do you put a hedge on inflation? Well, you buy a hard asset, okay? So that's going to be either real estate or gold or silver, fine collectibles, artwork or cars, or maybe even crypto if you believe in that thing. But the bottom line is when you put your money into a hard asset and the dollar value goes down, you've protected the dollar here, okay? And in this case, when people who are buying real estate, the values are going up and the rents are going up. So a lot of investment houses have figured out that there's a huge return here. There's a triple win for them. You've got the hedge against inflation, you've got the return on their investment, and they've got the long-term gain on the appreciation. So there's an article down below. I've got two articles for you guys to read that are amazing. So last quarter, $64 billion were spent by investment houses on investment housing all across the country. $64 billion on rental properties across the nation. That's billion with a B. So, and here in Phoenix, there's a company called Progress Residential, which they themselves bought 1,500 homes in the last year and turned them into rental properties. So people have figured out, hey, this is a smart way to make money. I can borrow money low, I can put it as a down payment on a house, and I can buy a house and get cash flow on my property almost immediately. And certainly as rents are going up, that cash flow will increase. Now, I talked earlier about interest rates. So if interest rates were to go up, that would probably slow things down, right? Because that usually tapers the borrowing. Well, problem with that is that the federal government has trillions upon trillions of dollars worth of debt, and they're servicing that debt every month, and they can't afford interest rates to go up. The Fed cannot raise the rates on itself because that debt service would go through the ceiling. So we're in a bit of a catch-22, okay? Interest rates can't be raised by the government to sort of taper things down because they're going to end up paying it. So now inflation will probably continue. Now, nothing happens forever. Everything's in cycles. It's looking like, but they're saying that probably for the next year and a half, this inflation is going to continue. And I just believe that more people are going to buy investment properties, and there's going to be less and less inventory available for sale, less housing available for just basic buyers and sellers, first-time home buyers, entry-level people who are coming into the market. It's just disappearing, and we are turning into a renter nation, and it's really quite sad. I'm watching it in front of my eyes, and I don't see how it's going to stop. These investment houses will continue to buy thousands upon thousands of rental properties, and prices will continue to go up and rents will continue to go up. So to find out more information about what's going on in the market, tune in to us on the Arizona Home Group TV on our YouTube channel. Find us on Instagram, find us on TikTok. John Sposato, Sharon Caffini, Thea Marr. We're always posting real-time, boots on the ground information. You know where to find us. Hope you guys have a great holiday, and we'll see you next month. Take care.